Welcome to Momentum Monday. Today is Sunday, November 24th. Howard is a bit sick, so he's not going to be able to join us tonight, but hopefully he'll be back next week. So without further ado, let me just share my screen and go over some current market trends and interesting developments. This is a Market Smith chart of the S&P 500. Last week we saw a slight pullback, but overall, the large cap indices, the S&P 500, the Nasdaq 100, are still in a steep uptrend. As you can see, they're rising above their rising 20-day moving average, 50-day moving average, 200-day moving average. Last week, we talked about a potential breakout in small caps, which have been denied around that 160 level for the better part of the past year. And as you can see, they reached close to 160 and they found some resistance again. So basically, the Russell 2000, the IWM ETF is currently building a handle of its base. And here's the weekly perspective. As you can see, 3 weeks of tight range consolidation. So if this bull market has further legs, I think it's a done deal. The Russell 2000 will eventually break above that 160. And financials and energy stocks have usually very high weighting in the Russell 2000. As you can see, KBE, this is the bank ETF, is also looking quite constructively, setting up near its rising 20-day moving average. Here's KRE, which is the regional banks ETF, looking similarly. The energy sector, doesn't look that great, but it's attempting to bounce. So overall, I think, one of the major next phases in this bull market will be the small caps breaking above 160. In the meantime, let's take a quick look at the mega caps and what are they doing. Here's Apple. After that relentless move, it was up multiple weeks in a row in the past few months. It's finally starting to pull back a little bit. This is normal, especially considering it's a huge market cap. Google, after that beautiful breakout a month ago, it's also pulling back. I wouldn't be surprised if it tests that 50-day near 1260 again. Amazon, I think, is the worst looking out of all, and it's still below its 50, below its 200-day moving average. I have no idea why the market doesn't like Amazon that much, but in order to get me interested on the long side, again, I need to see it back above its 200-day, back above its 1800. Microsoft, it's just consolidating near all-time highs. I wouldn't chase it here either. And I think Facebook is the one that is looking the most interesting currently. We talked about it last week, how it is setting up for a potential breakout. It actually broke out on Monday and then consolidated in a tight range, which is a very bullish market behavior. I think above 200, if it clears 200, we'll see it test its all-time highs near 208, 209. So out of the 5 mega caps, I think Facebook looks the most constructively. So what happened last week? So I think 2 main trends. Biotech shined. Last week we talked about how biotech is setting up for a potential breakout, and it did break out on Tuesday. This is XBI and also IBB. We saw some huge moves in the biotech field. And in the meantime, the other leading sector, which is semiconductors, is in a pullback mode. Just when everyone was feeling sure that there's no losing money in semiconductors, then we started to see some pullbacks in the sector, and actually quite a few of the semiconductors that are considered to be new leaders have already given up their earnings gaps and are about to test their rising 50-day moving average, their rising 20-day moving average. And I'm thinking that that pullback is most likely a buying opportunity. Of course, I would not just blindly buy near a rising moving average, even though some market speculators do exactly that. I mean, once they see a leading stock pulling back to its 50-day, they just open a starting position, let's say half a position, 1/3 of the usual position. And if they're wrong and the stock goes below the 50-day, you get stopped really quickly for a small loss. But if they're right and the stock bounces, you can add to that position and actually build a full-size position. And if you manage to get a leader at the rising 50-day moving average, that's actually a good risk to reward, because they tend to bounce there. And they often bounce because of a kind of self-fulfilling prophecy. I mean, if everyone is expecting a bounce at that level and the short sellers start covering here and near the 50-day, and the new money starts entering near that same level, it's a kind of self-fulfilling prophecy that leads to a bounce near all those. This is why in a bull market we often see leading stock bouncing near the rising 10-day, 20-day, 50-day, the major moving averages that so many people are paying attention to. And so, for example, with the Applied Materials, I would go long if it goes back above its 20-day tomorrow, which Friday its high was 57.14. If it goes above 57.30, I would go along with the stop the Friday's low and a target, first target 60 and second target here near 60. We're talking from a swing trading perspective, and many other semiconductors are looking similar. Qualcomm, I think if it doesn't bounce soon and go back above its 20-day, it is very likely to test its 50-day, where I would also be interested to open a long position. And here's SMH, which is the semiconductor ETF. I mean, it's threatening to break below its 20-day here. So it's a do or die moment, basically, for the entire sector. But in a bull market, as I said, those pullbacks are usually buying opportunities. And I have no idea why the semiconductors are pulling back. It might be just another sector rotation. Bull markets tend to correct through sector rotation, and this is why we're seeing the big indices, the S&P 500, just consolidating through time, near all-time highs, and in the meantime, we see a sector like SMH pulling back several percentage points, and then biotech being up several percent. And by the way, there was another big acquisition in biotech announced this weekend, so maybe tomorrow we'll see further strength in the sector that might lead to kind of exhaustion and a pullback in many of those stocks. The one biotech that I currently think is acting constructively is Acadia Pharmaceuticals, ACAD. As you can see here, it is setting up here its all-time highs, about 6 days of short interest. So it does have the potential for a short squeeze. High short interest setting up near its all-time highs. The sector is in favor. Those are all ingredients that can lead to a short squeeze. Typically all stocks that have high short interest are candidates for a short squeeze, especially the ones near their 52-week highs, because any stock that has been shorted will eventually be covered, and it can be covered voluntarily, you know, when short sellers are taking profits at much lower prices, or it can be covered in a forceful manner when the short sellers are forced to cover their bets at much higher prices, and therefore adding fuel to an established upside momentum. Let's take a quick look at the Momentum 50 list. Number one this week is Nevro, which is a medical appliances and equipment stock. There are quite a few of those stocks on the list. And let's take a quick look at the chart. As you can see, big volume breakout here. This is a huge breakout on 543% above the average volume, followed by sideways consolidation. Typically that leads to another leg higher in a strong market. And as you can see, that pattern here in Nevro, big volume gap, followed by sideways consolidation, and then another breakout, and then another sideways consolidation. The other medical appliances stocks that look interesting, Inspire Medical System, INSP, they tried to break out last week. Now they're consolidating here near 66.50, 67. I think if that level is clear, the stock is going back to 70. INSP is basically working on the right side of a pretty deep base, but it is looking constructively for the most part. It's a recent IPO. Another medical appliances stocks that looks interesting is Star Surgical. They had a big earnings breakout here, 140% earnings surprise that led to an immediate breakout followed by a slight pullback. And last week, the upside move was resumed. So keep an eye on this stock. It's looking constructively on multiple timeframes. And I think 40 is the next potential level of resistance, where if it's reached, we'll probably see some sideways consolidation or a pullback before it sets up again. What other stocks are standing out now is Lululemon. Typically, retailers tend to run into Black Friday, which is this week. We haven't really seen that this year. I mean, Lululemon is an exception, of course. It's been an extremely strong stock this year. It just keeps crushing earnings estimates, and so we see an earnings gap, a slight pullback to the 50-day, where buyers just keep stepping up. As you see it happen multiple times in the past few months. It's near all-time highs. Personally, I wouldn't chase it here, but in a strong bull market, it can continue to go higher. The other interesting retailer, I think, is Nike. I think buyers are back in control here, as you can see, and they stepped up again near the rising 50-day, and Nike is just working on another base. Burlington is another one that technically it looks very interesting. It's building that new base here between 190 and 210, and 210 is the obvious breakout level here. When do they report? Let me just take a quick look. November. Oh, they report in a couple of days. So no one really knows how the market will react to that report. I mean, I don't really shop there, so I have no idea what people are finding in that store, but its chart is looking constructively. And it has been looking constructively for quite some time. As you can see, it's up 300% since 2016. What else is on the list? So DocuSign, they tried to break out last week. 1 second. Let's go back. DocuSign tried to break out last week, but due to the overall market weakness, it was not able to follow through immediately. I think it's still looking constructively for higher prices, but we probably will see some pre-earnings move. Typically, people who expect the stock to beat estimates again tend to front run the potential good results. And the breakout has already started. Speaking of software, definitely in the past couple of weeks, we've seen many of the software as a service stocks recover and being under accumulation. Look at MDB, MongoDB. Had a huge run here from 130 to 150, and it's setting up near 150 again. Team is looking similar. Fighting support here needs rising 200-day moving average. AYX also starting to look constructively here. So in general, software is back. I mean, of course, there's some exceptions. Shopify, I think it needs to clear 340 to make the argument that the bulls are back in charge. But those big declines have already stopped in that field, and now we're seeing buyers coming back. Of course, all of those stocks still have very rich valuation, and at any given moment, you know, the market can switch and start selling them off again. But you know, when it does so, we'll see plenty of evidence for that, and then we can turn on the short side. So the last thing that I wanted to cover was the price action in Chinese stocks. Many of them have been hit pretty brutally in the past couple of weeks. Here's the FXI. I mean, below its 200-day moving average. The KWEB, which is the Chinese internet ETF, big pullback in the past 2 weeks. Bounced in the past couple of days. The Chinese market, it's kind of market of stocks right now, just like the US market. From one side, we have stocks like Weibo and Sina that were demolished in the past couple of weeks. On the other side, we have stocks like NetEase that are breaking out to new multi-month highs on strong earnings, and Alibaba, which is setting up on multiple time frames for a potential breakout. You know, I tweeted that on Friday morning, and the stock was trading around under 185. It's closed strong, and look at that weekly chart pattern. 3 weeks with very tight closing prices, very near next to each other. This is typically a very bullish setup, and unless something really bad happens in Hong Kong, as you know, there's protests there. I think we'll see Alibaba trying to test 200 in the next few weeks. So this week will be shortened due to Thanksgiving. Happy Thanksgiving to everyone in advance. And we'll see you next week, hopefully with Howard back well rested. Thanks for watching, guys.